Hi, welcome to Bookkeeping Basics. My name is Alison Mead from Silicon Bullet, and I'm here to help you fall in love with your bookkeeping. In this episode of Bookkeeping Basics, I'm going to cover managing your bank accounts. A great way to make sure your bookkeeping is correct is to use external sources of information to validate your records. And the main example of this in bookkeeping is your bank statement or your credit card statements. With the introduction of live links between banks and accounting software, many users have got lazy. You can import your bank statements into your accounting software and then allocate the entries to your invoices and bills. Remembering the advice in my earlier episode of making sure you allocate things to the right invoices as you go along, or you might not get paid. But these bank feeds are not infallible. And I always recommend going back to your humble bank statement and checking that regularly and comparing the balances to your bookkeeping software, because it's just a computer and it's not infallible. Sometimes there's a blip in transactions and you get something missing, and sometimes it imports the same thing twice and causes overlaps and duplication. And you need to make sure everything is in there, but only in there once. In systems like Xero, it can be really easy to get click happy as well, when you get a nice green tick and it suggests something matches. So you want to make sure that you always look at the detail of what you're matching in your bank reconciliations. And also, what is a bank reconciliation? The bank reconciliation was being able to match the balance you saw in your accounts and then add back or deduct things that hadn't appeared on your bank statement yet. But in modern accounting software, it's really just used as a term for ticking off things in your bank statement and making sure they're the same in your accounting software and on the paper from your bank account. Also remember that you can use separate bank accounts for business transactions and it will make the process easier. So for example, I might have the Bank of Ali in my bank where I've paid for things on behalf of my business, and there's lots of tricks in the bookkeeping software for keeping track of things so that you remember to pay yourself back for stuff later. Remember though, the bank statement is king. And you want to make sure the balances always match up to your bank statement. I've seen cases where people have imported transactions, haven't recognized them, and then they've deleted them. You always want to make sure that it matches back to the bank statement. And you want to try and do this as you go along. Do it weekly or monthly, or if you're a bit anal like me, you tend to do it daily. So just make sure when you're managing your bank accounts that everything matches, that you do it regularly and that it's accurate, because there's nothing more frustrating than having to go back months and to go and tick things off. It's the hardest thing to do. So always manage your bank accounts as you go along if you possibly can. To find out more and to get all the episodes from this podcast, then subscribe to me on your favourite podcast platform. Look for Bookkeeping Basics. To get more Xero and Sage tips and advice, then go to blog.siliconbullet.com or look for me on Silicon Bullet on YouTube, where you will see me giving bookkeeping tips, usually walking my dog Daisy.